the transportation sector. We are hoping that the regulation for autonomous taxi platforms turns into federal regulation as opposed to state by state, which would accelerate the rollout of autonomous. And of course, Neuralink is subject to FDA regulation as well. So there's Elon is involved in companies that are depending on the government. And I think his beginning to dial it back by first deciding to decommission the Dragon spacecraft, which brought the 2 astronauts back from the space station, and then basically saying, no, that's probably a bad idea. I think we're beginning to walk this back. Now, one of the hypotheses out there is that what has happened was partly, not entirely, orchestrated. A board of Tesla, how would I respond to this? And one of the things I've observed is over the years since we've held Tesla is that Elon Musk works really well under pressure, and he creates a lot of that chaos and pressure himself. So I think part of what's going on right now as well is his confidence in the robotaxi rollout is increasing, and he does expect that it's going to be successful, dependent on regulation, of course, for how quickly this success will come. And I think I would be advising the chair of the board and others just to encourage him to get back to the future, back to really changing the way the world's going to work. And he did say that that's what he believed his role is, to accelerate, to get the tariff fight behind him. And he definitely does not need another fight on his hands. And of course, Elon Musk wants to get to Mars and transform the universe, shall I say. And he doesn't need to get bogged down either. So we do think they will, at the end of the day, listen to that kind of reason. And as you know, we're used to volatility in our portfolios. So after the election, or since the election, we did, all told, net, sell nearly $500 million of Tesla, expecting some other reason for volatility. So we try to use the volatility to our advantage. And of course, as Tesla was taking off after the election, there were other stocks that were not. And so in the ETF wrapper, which before we really happened upon the scene in 2014, wasn't even a thing. Most of the ETF world was passive. But now, as I'm sure you all know, a lot of other management teams are moving towards the ETF wrapper as well. So just felt we should explain a little bit, given all of the drama out there and how much Tesla's stock price did drop yesterday on Thursday, the day before Employment Friday. It's rebounding nicely now, and so let's see what happens here. As far as the rest of fiscal policy, all eyes on the bill and when it will or will not be passed. We do think it will be passed, and the question is, will these government spending and some non-core consumption and investment. So, and in the first quarter, while real GDP was negative, 0.2%, this measure of core that Chairman Powell is focused on was up more than 3%. Now, if you take out everything that hit GDP, of course, it's going up. Well, in the second quarter, according to GDP Now, it's going to slow down. That metric is going to slow down to 2%. But core investment alone is dropping down 2.2%. Capital spending is getting hit. Again, companies are pulling back until there's more certainty. And so I think that measure will give Chairman Powell pause, especially if inflation remains well behaved despite tariffs. And what 100,000 of those 139,000 were due to the so-called birth-death ratio of businesses. So new business openings, and those get revised. So I think the employment numbers are going to be revised fairly significantly when we look backwards in time. They revise those on that basis, I think, every 5 years. The other thing that we learned is that the diffusion index for employment is right at 50%. So half of the employment categories are increasing and half are decreasing. That's down from 80% increasing at the peak in 21-22. And I think 70% compared to the peak in 2007. Deflation is where we're going here. And so this debt will be very difficult to service if we do go into a deflation, unless unit growth really booms. And we actually think that's possible moving into 2026. So on the next chart, I mentioned corporate tax rates. You can see here, X marks the spot where the corporate tax rate would go if there was immediate expensing of equipment and structures. And you see, you have to go back really to the 40s, the late 30s and 40s, to see a lower effective tax rate. On this next chart, you can see the core PCE index. This is very important, a very important inflation metric to the Fed. And here you can see there was a little bit of stall in the 2.5% to 3% range, and it is starting to break down. You can see one of the reasons is here. Gasoline prices are moving down, certainly on a year-over-year basis. They're down quite a bit. And you can see trueflation. So this is the measure of inflation, real time, 10,000 items analyzed in real time or updated in real time. And a lot of people have been wondering if the tariffs would take this. In 2020, we got to roughly 7%. We would not be surprised to see more of a burst, given what's happening with AI and how many companies are beginning to flatten the hierarchy within companies, taking middle management out as more and more people can do much more with by harnessing these technology tools. Here are auto sales, just to update you on that. We had the burst ahead of tariffs, and you can see now where we are, that I think it's 15.7 million units at an annual rate. So we're reversing already. And we would not be surprised to see this drop below the 15 level again before the recovery starts. Here's a gauge. So we think this response, units falling, is going to take away the incentive for companies to continue to push tariffs through in pricing. We'll spend a little bit more time on housing. I know that's of great interest to many people. It's their largest asset. So here you can see home sellers versus home buyers. Home sellers in green and home buyers in purple. And there's a big imbalance developing here, suggesting that the market is very weak and that the buyers are probably not going to move unless they have a good reason. Either interest rates come down or prices come down. And you can see here what's going on with volume. It gets in with a lag, but it's been going on for long enough now that we think we're going to see it soon. And you'll have more people talking about deflation then, not for a great reason. This is, buyers just saying, no, we're not going to buy unless you give us a better price, sellers. So as the sellers pile up, probably having no choice, they'll probably cut their prices. Now into market indicators. So starting with the dollar, we hear so much talk about how horribly weak the dollar is. Well, if you look at this chart in the context of history, and I know we go through this every time, but we keep hearing that mantra, the narrative, is just not true. If you look over the last 15 years, we've gone from roughly 70 to 100 and over it. So we think it will resolve on the upside here, not on the downside. And that, again, I think goes against the grain. A lot of people are out there very negative about our deficit, our government spending, and we're not happy about it either. But we can also see a lot of reasons that growth is going to accelerate thanks to the massive amount of innovation taking place out there. Another metric that is pointing in a positive direction, unlike the late 60s to early 80, is the S&P price to the oil price. And that's reaching for new highs, which is very positive. Crude oil going down is a major tax cut for most every part of the globe, except for the Middle East. And so this is a very good thing to see. And of course, this week, Saudi Arabia basically said that suggests that risk on is where we are moving, and a market rewarding innovation. One is the Neuralink deal, and that was so oversubscribed. And the animal spirits are alive and well. Certainly in the private markets, but also in the public markets. The Circle deal, which we had been monitoring Circle for a very long time, and I do have a little story there. Jeremy Allaire, who's the CEO of Circle, he was at the World Economic Forum technology conference in 2016, as was I. Amazing debut in the public markets this week. I think in the first few days, the Circle is up 3 to 4-fold. And this gives us confirmation that animal spirits are back. And the fact that an apple could be down 18%, I think it is, this year, having really been the leader of the mega tech group, is forcing investors to take a look at other exposures to innovation that are maybe not in the Mag 6. And we think that is accruing to the benefit of, the next generation of innovators. So we're...
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.